bonus episode of Retirement Lifestyle Show. I'm your co-host, Adrian Nicholson, and I'll be traveling up and down the East Coast over the next couple of weeks. So I wanted to get a new episode called Simple Ways to Build Wealth and Security. And sometimes wealth building and finances can get very complicated. So my job really today is to help simplify in a way that gives you actionable steps to take control and ultimately achieve your financial goals with confidence. So we're going to break it down by starting with the first one, which is retirement planning strategies. One of my favorites is test drive your retirement lifestyle. If you always imagine traveling a lot for months, or something I would like to do, golf a lot during the days, or even if you want to start a small business in retirement, try it now, at least on a small scale. You'll learn both what you enjoy and what the costs are, which can be very beneficial. This gives you a way to visualize and, like the title says, test run it just to see what it looks like, what it costs, and whether or not you enjoy it, or the other things that you want to pursue or other avenues that you want to go. Next on the list, I have stress tests. Stress test your plan, whether it's retirement, investing, taxes, anything, stress test it. And what I mean by that is ask yourself, what happens, for example, if markets were to drop? What happens if inflation is higher than expected? What if you are living a long life? If you're living into your 95s or even 100s, what would that look like to your plan? This is what I mean by stress test. Running through what if scenarios can give you peace of mind because you know your plan can handle different outcomes. And that's the key. What ifs, planning, stress test, and you can see what are the various outcomes and what that looks like. And that can help you make some decisions, because if you see one outcome you're not happy with or one outcome you're very happy with, that can kind of help you, like I mentioned before, visualize and plan for the future. So unexpected things that come up along the way, you're more prepared for, and you're able to take care of it, and you're better prepared, which is something that is going to be a trending theme within this podcast today. Next, I have under this retirement planning strategy umbrella is the retirement smile. And I really like this name, and it's a very powerful thing that you should learn and look into and research, because this shows that spending often peaks in those early years of retirement. Maybe you're more active, you're traveling, you're pursuing different hobbies. And then as the years go on, where we talk about this is more the middle years, the spending starts to decrease, your expenses may start to decrease and lower. And then towards those later years in retirement, you might see those expenses starting to rise, whether you pick up traveling more, maybe you have more healthcare costs that you have to take care of. Designing your financial plan with that spending pattern in mind can help you avoid surprises and give you more certainty and clarity too on what that looks like in your financial plan. So the next category I want to move us on to is investing. This is a big one. We talked a lot about this on previous podcast episodes, but I think this would be a fun one to talk about as well today. And the first one I have on here is stick to your investment plan. Whether markets move up, whether they move down, it's sometimes tempting to chase what's performing well. And this is a behavioral finance category or topic known as herd behavior. This is where you see a group of investors chasing a certain stock or investment that's performing very well. They want to add it to their portfolio, buy into it. And that's the term called herd behavior. And what you need to understand is usually that leads to mistakes or over trading, which can also cause additional costs within your investment account or your portfolio. Sometimes the best move is to simply pause, take a breath, and stay the course that you might have enacted in the beginning of the year or the later on that's helped you during times of market volatility, which is very crucial because that can help you not make emotional investment decisions or second guess some good strategies or good principles that have kept you in place that helped you in very tough market environments, and just keep to that so you don't make any mistakes or any errors when it comes to your investments. Sometimes it can work out, but more than likely it's very hard to predict, so you don't want to put yourself into that position. The next thing I have is a big one that we talked about plenty of times on the Retirement Lifestyle Show: diversification. Instead of single stocks or single sectors or concentrating investments in a certain area, you have to look at different asset classes, regions, or industry and sectors. One is stocks, bonds, cash. Now, crypto is becoming its own asset class that people are interested in seeing how they can structure that in their portfolio. Where are regions? Are all your investments concentrated domestically, or are they all international? Do you have a global investment portfolio approach that can help you withstand any type of risks that are out there depending on what the region is? And then the other one I mentioned, industries and sectors. This could be technology, energy, healthcare, industrials, consumer discretionary, staples, you name it. There's a lot of different industries, sectors out there, and different asset classes that can help you be more diversified. Sometimes being diversified isn't just I own stock A, stock B, stock C. I'm diversified. That stock A and B and C might be all in the technology sector. And if we have bad news around technology, that might impact it. Or all these stocks could be in the energy sector, and new regulation could get passed in Washington, D.C. that impacts that sector. And that could have a very significant impact on your portfolio and your investment. So that's what I really want to kind of describe and make you aware of, which you can be more careful and ultimately make you a better investor in the future. So the next thing I have is rebalancing periodically. If you have a certain stock or a certain part of your portfolio that had a strong run this year, your portfolio might drift out of balance with your risk tolerance. A quick adjustment once or twice a year can help your risk level where you want it to be. And what I mean by that is whether you're a conservative, moderate, or aggressive investor, sometimes if you set it and forget it or have a buy and hold strategy, depending on what those investments do, they might over time get out of line with the level of risk you're willing to take as an investor. So that's where rebalancing is very crucial. Again, another example where if you have this industrial stock that has done very well over the year, then your portfolio as a whole, if you look at it, could be heavily invested in this industrial sector or space or this individual stock. Well, if something happens to that area or investment or that sector, especially in the industrial space, and that goes down, that can have a significant impact on your portfolio and your wealth over the long term. And that's something too that you need to be mindful of. The next category I want to bring us to is something that often gets overlooked. It's taxes and withdrawal strategies. The order in which you withdraw from certain accounts, it really does matter. So my kind of quote that I want to leave you with is think before you withdraw. Coordinating between taxable, tax deferred, and Roth accounts can make a big difference in your lifetime tax bill. So what I mean by this, if you're not familiar with this, taxable accounts are your regular brokerage accounts, joint accounts that you invest in, whether they're stocks and bonds. Those are taxables based on the buys and sellings and how those investments perform. Tax deferred, you can think about it as your 401k, your 403bs, your IRA accounts. You really don't get taxed at all until you start pulling money out of those accounts. And then lastly, the Roth account, which I mentioned, that's the one that's tax-free growth. The growth on those investments are tax-free when you withdraw. And how you strategically take money out of these accounts can be very crucial to your financial plan. Next, I want to talk about Roth conversions, as this is where you'll convert money from an IRA into a Roth IRA, which will cause you to pay taxes today. But as we know, putting money in that Roth IRA could be very beneficial because the investments in there can grow tax-free over time and can allow you to have tax-free withdrawals in the future. Now we're going to move on to Social Security. And Social Security is a very big conversation I have with my clients a lot, especially when it comes to timing and when to take Social Security. And I'm going to simplify this into two different people. The first person is somebody that really wants to have a high fixed income in retirement. So that's where we may look at when's the best time to take Social Security. And some people will more than likely say, we'll delay it as long as possible. The farther you go out into your 60s, getting to age 70, the more income you will get from Social Security. So that's one example. The other example is somebody who may need to fill in those gap years on where they're going to be getting their income from. They could take it from those accounts, like I mentioned, those taxable accounts, tax deferred accounts, Roth accounts, but maybe they want to keep those investments and let those grow more in a tax advantage way. So what are their options? Maybe instead of delaying Social Security to get that higher fixed income, in that case, they might want to take Social Security now so they can leave those other accounts to grow in a more efficient manner. That's where your personal situation comes in here. A rule of thumb or what other people are doing as far as when taking Social Security might not work for you. And that's where you should have a conversation with somebody, consult with an advisor, see what your situation entails, can have a very significant impact on when you should take Social Security, because this does have a very long-term impact, as we know. The last category I have is lifestyle and personal strategies. And to bring this one home, one of the first things I want to talk about is when it comes to this category, there are a lot of different areas I'm going to talk about. I'm going to talk about beneficiary, planning your digital assets, supporting family, loved ones, and friends, and aligning your spending with your values. But I first want to just take a pause here, commercial break, and say if you found some of the things I talked about helpful today, like, subscribe, go to our website. So moving on to the next category, another thing that you can look at as well, especially as we get towards this end of the year, is check your beneficiaries, whether it's a retirement account, life insurance policy, whether it's your estate documents, life changes, whether it's marriages, kids, grandkids. You want to make sure your money goes where you intend. Next, I have plan your digital assets. We live in a world where online accounts, subscriptions, and passwords. Keep a secure record and notify the people you trust in case this is something that needs to be utilized in the future for your benefit if you're unable to. Next, I have on my list, supporting family, loved ones, or friends. Whether it's financially or emotionally, it's natural to want to help, but make sure you also prioritize your own financial future or your well-being so you're able to support these people or these causes or these charities or whatever it is over the long term. And lastly, align your spending with your values, whether that's with family, experience, beliefs, or charitable giving. Money can be used as a powerful tool that allows you to do what you value the most. So I know those are some simple, practical ways to grow and protect your wealth and secure your future when it comes to retirement, investing, tax strategies, lifestyle decisions. And it's a lot of things that you got to think about and plan as we're getting towards the end of the year that I think is very crucial and can help you stay on the right track to achieve your financial goals and ultimately take control. And if you have any questions, please reach out to us and let us know.
Schedule a conversation with Roshan, Adrian, or Eric today at retirementlifestyleshow.com. Roshan and Eric are certified financial planner practitioners. They, along with Adrian, are investment advisor representatives and serve clients across the U.S. with financial planning and investment advice through Arete Wealth. If you found this show helpful, gained knowledge, or enjoyed the time you spent with us, tell your friends and leave us a 5-star review. This will help others discover the show. To access our show notes, to download any of the tools mentioned in today's podcast, to ask us a question, or to schedule a conversation, go to retirementlifestyleshow.com. All opinions expressed by podcast hosts and guests are solely their own. While based on information they believe is reliable, neither Arete Wealth nor its affiliates warrants its completeness or accuracy, nor do their opinions reflect the opinion of Arete Wealth. This podcast is for general informational purposes only and should not be regarded as specific advice or recommendations for any individual. Before making any decisions, consult a professional. The show hosts offer investment advice through Arete Wealth Advisors, LLC, an SEC-registered investment advisor, and securities through Arete Wealth Management, LLC, member FINRA, SIPC, and NFA. Finally, our music is The Chance by Jason Shaw in Audionautics. It's part of the YouTube audio library, and it's licensed under a Creative Commons license. I am Ray Voices. Thank you for listening.